The AI honeymoon is officially over, while retail investors are still blindly buying the dip on tech stocks. The smart money, the institutions, have completely changed their strategy. They have locked in what we call an always-on hedge, and they are quietly rotating trillions of dollars out of software and into the physical world. Today, I'm going to show you exactly how we are tracking these institutional flows using our proprietary net options sentiment data. I'm going to explain why the big money is hedging right now. And more importantly, I'll show you the concrete floor, the specific sectors where trillions in structural CapEx are pouring in right now. If you want to stop trading blind and start trading alongside the institutions, pay close attention. Let's start with the data. At Prospero, we track something called Net Options Sentiment, or NOS. This isn't just a basic put-call ratio. It's an advanced AI metric that tracks exactly how institutions are using options to either speculate or hedge. Typically, SPY Net Options Sentiment leads the market. It drops to zero. Something bad is about to happen. Once the drop is over, it usually spikes back up into the 30s or 40s as institutions buy the dip. But look at what happened starting in 2026. The SPY Net Options Sentiment went to zero. And it stayed there. Even during massive upswings in the market, this number flatlined. Why? Because institutions have changed their risk strategy. They've locked in a Perma-Hedge. They are buying collars and downside protection because they view the upside right now as extremely limited. You only keep bearish hedges active if you expect turbulence. The data is telling us that big money is risk-off. And until this net options sentiment spikes back up, you should be playing defense too. So what are they hedging against? A full Schumpeterian reckoning in the tech sector. Agentic AI is hammering legacy SaaS, logistics, and enterprise software. We're seeing names like Salesforce and ServiceNow take hits. Meanwhile, the hyperscalers are staring down over $700 billion in 2026 CapEx just to build data centers and buy GPUs. The market is penalizing this spend-at-all-costs approach. Over 35% of fund managers are now flagging overinvestment risks in AI. In fact, the SPDR technology sector ETF $XLK recently hit its highest short interest in 6 years. The narrative has flipped from AI lifts all boats to a massive flight to safety. But where is that safety? This brings us to our favorite contrarian angle right now. We call it the shift from code to concrete. While tech valuations normalize, sovereign flows and structural CapEx are quietly providing a massive floor for the real economy. Trillions of dollars are pouring into power grids, renewables, logistics, and data center energy infrastructure. AI demand is sending electricity prices soaring. Compute is literally the new crude oil. This isn't speculative hype like software startups. This is tangible reindustrialization. If AI succeeds, these infrastructure plays compound. If AI fails to deliver, these companies still benefit from the massive build-out that is already underway. This is exactly why we are seeing textbook flight to safety rotations out of semis and growth and into utilities, energy, value, and industrials. So, what is the playbook? It's simple. First, we are no longer blindly long on high CapEx, Mag 7 names. Second, we are keeping some beta hedging exposure, like the SQQQ, to protect against a 5 to 10% market retrace. And third, we are rotating heavily into AI-resilient industrials, utilities, and consumer defensives. You can't navigate a market shift this massive by just reading headlines. You need to see where the institutional money is actually moving. Every day, we track these exact net options, flows, and sector rotations in the Prospero trading letter. We tell you exactly what the smart money is hedging and what they are buying. Click the link in the description to get access to our daily data and stop getting trapped by the algorithm. I'll see you in the next video.
The Institutional Edge.